Hello Forex traders, this is Eric with the Forex point and figure system. If you want to learn more about it, visit fxpnf.com. I want to take a look today at the euro and the pound because the European Central Bank and the Bank of England both met this morning and they both held rates where they are. We're seeing a little bit of a reaction in the US dollar pulling back versus these two currencies. Now, the European Central Bank, I think, is a bit more hawkish on inflation and probably more likely to keep rates where they are than the Bank of England. That's why I think if you're taking a bullish dollar stance right now, which, by the way, I think is a good stance only because of the overwhelming negative sentiment surrounding the greenback, I think the better way to execute it is through the pound. See here in the Euro-US dollar, we're looking at an hourly chart. And the currency did rally after the European Central Bank meeting. Now, that wasn't before the euro dropped down to 153, and this is down quite a bit in the last couple of weeks from highs near $1.60. However, after the European Central Bank's press conference this morning, Jean-Claude Trichet, who was a bit hawkish on inflation, I think hinted towards keeping rates where they are. And that has since enabled the euro to climb by over 100 pips, getting up to about $1.54. Now, if you're looking to short the euro-US dollar, I think it's better off at higher levels. Now, just the opposite side of that coin is if you're looking to buy the euro-US dollar, if you're still bearish on the greenback and maybe you're bullish on the euro, I think it's better executed at lower rates. So in short, look to buy the euro-US dollar on pullbacks and sell it after it rallies. Now, of the two currencies, I think the pound presents a better opportunity. Here too is the hourly chart. And in just a second, we'll look at a point and figure chart of the pound US dollar. The pound is a better short, I think, because the Bank of England is more likely to be cutting rates soon in an attempt to help to stabilize its own subprime and credit crunch. The United Kingdom has a housing market that is at risk, just like that in the United States. But I think the UK housing story is a little bit behind the US. In other words, the U.S. housing market crumbled before the United Kingdom housing market has crumbled. So that could set up the pound for a much further drop. In fact, I've been looking for a meaningful drop in the pound, one that's going to take several months, maybe through the rest of the year to unfold. So let's keep that in context. But nevertheless, I've had some success in the short term here. I've recently been shorting it near 199. But of course, we saw the pound this morning drop all the way down to 195. Quite a bit of volatility came into the currency after the Bank of England announcement, but net, we haven't moved a whole lot off the lows. The pound is only up by about 50 pips off of those recent lows. Now, the 195 level is an extremely important short-term support level. If it breaks, I do suspect the pound will drop pretty quickly down to 192. But that said, I prefer buying the dollar on dips, or put another way, shorting the pound US dollar after it rallies, getting it closer to resistance, where I can set a tighter stop loss and be in a better position to ride out a longer lasting trend, one that maybe lasts again for a couple of months, maybe into the end of the year. In short, I'd be looking for a 1,000 pip move or somewhere on that type of scale. So that's where I sit today. I still like buying the US dollar on dips. That's a Forex trading strategy that I have been following on my blog. If you want to follow along and learn more about trading the Forex market with point and figure charts, make sure to stop by my site. It's fxpnf.com.